Welcome to Vector News 24. I'm John, and this is our full trading day recap for Monday, April 13th, 2026, and a look ahead to what you should watch on Tuesday. Let's start with the big picture. Global markets opened under pressure as oil prices surged back above $100 a barrel, driven by renewed geopolitical tension in the Middle East. The U.S. announced a blockade of the Strait of Hormuz after failed peace talks with Iran over the weekend, which immediately sent crude benchmarks higher and triggered a risk-off mood on Wall Street. On the NYSE, the Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all traded sharply lower through the first half of the session. The main drivers were energy-linked stocks, banks, and some of the big tech names that are sensitive to higher interest rate expectations. Investors were pricing in the possibility of a more hawkish response from the Federal Reserve if inflation pressures re-intensify due to higher energy costs. Later in the day, we saw a modest intraday relief rally. The dip in equities attracted some bargain hunting, especially in large-cap tech and economically sensitive names. By the close, the S&P 500 and Nasdaq were still down on the day, but off their worst levels, while the Dow ended with a more pronounced loss. Overall, volume was solid, indicating strong participation rather than a speculative panic. On the earnings front, Goldman Sachs kicked off the major bank reporting cycle with its quarterly results. The bank reported solid trading revenue, but softer expectations for investment banking activity, which kept pressure on the broader financial sector. Other scheduled earnings releases and company announcements added some stock-specific noise, but the headline theme of the day remained oil and geopolitics. Behind the scenes, the U.S. dollar weakened slightly against major currencies, while safe haven assets like gold and U.S. Treasuries saw modest inflows. The 10-year Treasury yield edged up, reflecting the market's concern that higher energy costs could keep inflation break-even levels elevated. For the average investor, the key takeaway from April 13th is this: markets are still very sensitive to geopolitical risk and energy shocks, even after a strong run-up in recent months. Short-term volatility is likely to stay elevated, and positioning around macro events such as oil moves and central bank policy signals will be more important than ever. Now let's move to part 2, where we'll walk through what to expect tomorrow, including upcoming economic data, corporate announcements, and events that could shape the next NYSE trading session. Turning to tomorrow, Tuesday, April 14th, 2026, there are several important data points, events, and potential catalysts that traders and investors should keep an eye on. Starting with macroeconomic data, the United States is scheduled to release the Producer Price Index for April. The PPI measures input prices for producers and is closely watched as a leading indicator of inflation pressures. Markets will be especially sensitive right now because any spike in producer prices could be interpreted as a sign that higher oil and energy costs are starting to feed through the broader economy. Expect to see focus on the month-over-month and year-over-year figures, as well as any revisions to prior data. Beyond the PPI, traders will also be on the lookout for any comments from Federal Reserve officials. The Fed calendar shows several scheduled speeches and interviews, including remarks from regional Fed presidents. Even if they don't break new policy ground, the tone of these comments can move rates, and by extension, the NYSE. Hawkish language about inflation, or the possibility of a pause in rate cuts, would likely weigh on growth-sensitive names, while dovish hints could provide support. On the corporate side, we're still in earnings season, so tomorrow could bring more quarterly results from large-cap and mid-cap companies. While the exact timing of every release can vary, it's wise to pre-scan the calendar for any major names in sectors like energy, financials, and technology that are scheduled to report. After the Goldman Sachs print today, attention will likely stay on financials and cyclical stocks, since they're most exposed to rate and credit risk expectations. Geopolitics remains a key wildcard. With the Strait of Hormuz blockade still in the headlines, any fresh developments, whether positive steps toward de-escalation or further deterioration in the situation, could trigger sharp moves in energy stocks, shipping names, and broader risk asset positioning. Oil price action overnight and into the Tuesday open will be a major driver for the NYSE at the start of the session. From a technical level perspective, key levels to watch include the prior session's intraday lows and the day's highs on the S&P 500 and Nasdaq. If those levels hold as support and resistance, they can help define the trading range for the new session. Breakouts above or below those levels with strong volume could signal a continuation of the downtrend or a more aggressive relief rally. For individual investors, the main things to watch tomorrow are the PPI release and its interpretation through the lens of inflation and Fed policy, any notable Fed commentary, how energy and financial stocks react to oil price action, and whether the market can hold the lows from today without a fresh capitulation in volume. If you're holding long-term positions, this kind of volatility is a reminder to stay focused on your time horizon and risk profile, rather than reacting to every intraday move. If you're trading shorter term, pay close attention to the pre-open and early session price action, because the first 30 minutes often set the tone for the rest of the day. As we move into the April 14th trading day, it's also important to look at what's happening in Asia, especially the Japanese market, where the Nikkei 225 is about to open for the new session. Asian markets often take their cues from US and European action the night before, but they also respond strongly to local news, currency moves, and commodity flows. With oil prices still elevated after yesterday's surge in crude, energy-related stocks across Asia are likely to see some volatility. Oil-importing economies could feel pressure from higher fuel costs, while some energy-exporting regions may see modest support in related sectors. Now let's zoom in on Japan. The Nikkei 225 is one of Asia's most important benchmarks, and it tends to be sensitive to three main drivers: the value of the yen, global tech sentiment, and any domestic policy or economic updates. After the US market session closed lower yesterday, Japan's index is likely to open under pressure, at least in early trade. However, if there's any sign of a relief rally in US tech or a softening in the dollar-yen, Japanese exporters such as automakers and electronics firms could see some of the first signs of recovery. Investors will also be watching the Bank of Japan's stance. With global inflation pressures rising again due to oil, markets are assessing whether the BOJ will maintain its ultra-accommodative policy or start to shift. Any hint of a tweak in yields or a change in tone from Japanese officials could ripple through the Nikkei and broader Asian equities. On the corporate side, Japanese companies are still in a busy earnings and guidance period. Any positive surprises from large tech or industrial names could help support the Nikkei, even if global risk sentiment remains cautious. Conversely, weaker guidance tied to higher energy costs or supply chain concerns could amplify the downside. For the rest of Asia, mainland China's benchmark indexes are likely to trade in a range, as investors weigh the impact of higher oil on an already moderate growth economy and watch for any fresh policy signals from Beijing. Hong Kong-listed shares, especially in sectors like property and finance, can be especially sensitive to sentiment shifts in the US and Europe. From a trader's perspective, the key things to watch for Asian markets on April 14th are how the Nikkei reacts to the overnight US move and the open level versus yesterday's close, the direction of the yen and regional currencies, and whether Chinese data or policy news create any surprise moves. Strong gains or heavy selling in Asia can often flow into European and US trading later in the day, so this session is more than just a regional story. It's a building block for the broader global risk picture. If you're following the NYSE, keep an eye on how US tech and financial futures react to the opening in Tokyo and how crude trades in Asia. Those moves can give early clues about whether tomorrow's session will be another risk-off day or starts to see buyers step in at better levels. That wraps up our full recap of the NYSE trading day on April 13th, our look at what to expect from Asian markets, and especially the Nikkei as they open for April 14th, and a preview of key events, data, and announcements that could shape tomorrow's session. If you found this breakdown useful, make sure to like this video, subscribe to Vector News 24, and hit the bell so you don't miss our daily market updates, economic deep dives, and breaking news. We're here to deliver clear, no-hype coverage of the markets and the global economy, explained in a way that's easy to understand. Leave a comment below with your thoughts. Do you think this recent pullback is a buying opportunity or a warning sign for the weeks ahead? We'll reply to your comments and bring some of your ideas into future videos. Thanks for watching Vector News 24. Until next time, this is signing off.